Hello there. Today is Wednesday, April 29th. Normally I would be gearing up for the end of tax season. Tomorrow normally is the end of tax season. But because of the pandemic we're in, obviously the CRA has moved the deadline to May 31st. So we are not at the end of tax season today. Today I wanted to go back to a good old-fashioned accounting how-to video. I haven't done one of these in a long time, because I've mostly been talking about what Trudeau's been talking about in the pandemic. And between those lives, I've been talking about just what's been going on in my life. So let's go back to one of the how-to videos. Today, we are going to talk about payroll. This is partly inspired by all of the talk and discussion that happened when the government came out with the Canada Response Benefit, the CERB. Still don't know what that is or how to say that. And the criteria was $5,000 in employment income, self-employment income, or like EI benefits, that kind of thing. And there was a lot of confusion around, well, I'm incorporated, so therefore I'm self-employed, so therefore I must qualify. But there's two ways to pay yourself out of a corporation. One is through dividends, and the other is to be on the payroll, that you're actually an employee of your company. And so in discussing that, it became very clear that maybe this is not a super understood topic. Like, how does payroll work? And then I was chatting with a colleague today, and I was explaining to them that I needed them to do some manual payroll for me, which is another story. And the questions that they were asking were like, oh, right, this is not necessarily something that you understand unless you do it every day. So let's talk about, how does payroll actually work? I am not going to go into like the legal details of like being an employer. I am not going to talk about the tax code, or sorry, the employment standards code. But what we are going to talk about is how this all sort of comes together. So what happens? So your employee works for you, does some work, and then you have to pay them, obviously, whatever their wage is, whether it's a salary or it's an hourly wage. And so they earn, say it's hourly, say they have $20 an hour that they earn. And so you owe them that at the end of the pay period. As the employer, it's your responsibility to make sure that the income tax that the employee owes, and the CPP that they owe, and the EI, so the Canada Pension Plan, and the employment insurance amounts, that those three things that they owe to the CRA are deducted from their paycheck. Those are deductions at source. So their job is the source of their income. So you as the employer are making those deductions at the source of the income. As an employer, you're also responsible to match their CPP deduction or contribution. So CPP is 5.1%. And so you have to match that amount, whatever it is. So maybe they had a CPP that they had to pay of like $100. So you also have to pay $100 on top of that. EI, as an employer, you have to pay 1.4 times whatever the EI deduction is for the employee. So maybe they had $50 that they owed in EI. You would have to, you would have to pay the $50 that they owed. Well, you don't as the employer. You deduct the $50 from their paycheck, and then you have to pay on top of that 1.4 times the $50. So all of those things, the income tax that you deducted, the CPP that you deducted, plus the employer's portion of the CPP, the EI that you deducted from their paycheck, plus the employer's portion of the EI, those five things all get lumped together and they get paid to the CRA. They get paid to the business's payroll account. So I had a client one time who was the sole employee of their company and had never done payroll before. And so they actually paid the remittance, the amount that they had deducted, to their own personal CRA account, because they thought, well, I've deducted it from my own individual like paycheck, and it's the taxes that I'm going to owe, so it belongs on my CRA account, which is a very logical thought train for sure, but that's not how it works. It has to be, it's deducted from all of the employees and then paid over to the CRA under the business's payroll account. So if you're going to have employees, you have to go and open a payroll account with the CRA, which is super easy to do. If you already have a business number, you can just go and open the account. You can call them to do that, or you can go through the online business registration and you can just open it up. It takes like less than 10 minutes. Where is it? Yeah, so all of the remittance turns out means to withhold. So it's those source deductions, the income tax, the CPP, and the EI that you've deducted from their check, plus the CPP and EI that the company owes, and all of those get paid over to the CRA. And if you are a regular remitter, then you pay on the 15th of the month for the prior month. So for the month of January, for example, your source deductions are due to the CRA by February 15th. If you're a quarterly remitter, then January, February, and March remittance for those 3 months are due April 15th. It's due the 15th of the month following the end of the quarter. And when you actually go to pay over to the CRA, you also have to let the CRA know how many employees you have, what the total remittance is for the period, what the period end is. So if it's the source deductions for January that you're paying February 15th, then it's for January. And the gross payroll that you had for the period. All of those things go to the CRA, and it's the remittance that you make throughout the year that they then match up to the T4 summary that you have to file at the end of the year. So you're giving out T4s to all of your employees, and then you have to file all of those T4s with the CRA. And there's an extra form, it's called a T4 summary, that literally just summarizes the T4s, all of the T4s that you're filing for the year. So they compare that T4 summary to what you filed all year, and if there's a discrepancy, then you owe the CRA that amount plus penalties. They don't like it when you owe them money, especially for payroll, because that money is not actually yours, right? You deducted it from your employees' paychecks. And if there's too much, then they'll give you a refund, but it's not good to be different. They're going to ask questions as to why it's different. So that's a basic overview of how payroll works. People work for you, you pay them the amount that they're owed, you withhold some of that amount because they owe income tax, CPP, and EI, you match the CPP and pay 1.4 times the EI. All of that money gets bundled and paid to the CRA. It's a basic high-level overview. If you have questions about all that, please leave them for me in the comments, and I will absolutely answer them for you. Yeah, if you have any other questions, leave them in the comments for me as well. And let me know if you are employed by your company or if you take dividends. I'd love to know what the split is there. If you're a sole proprietor, you cannot be an employee of your company. You can have employees. You yourself cannot be an employee of your sole proprietorship. Yeah, if you're incorporated, I'd love to know if you go the salaries route or if you go the dividends route. Let me know in the comments. And of course, I'm here for any questions that you have in the comments as well. I hope you're staying safe, sane, and maybe got to open the window today because it was kind of warm. At least it was in Ottawa. I'll see you tomorrow.